Please subscribe to the channel and hit the bell icon so you get notification every time there's a new video. Hello, this is Amy from iTradeAIMS.net, AIMS Stress-Free Trading, alive and well from Birmingham, UK. If you're new to the channel, we trade Forex and I trade DAX, the German index, at the London Open on the M1 and in the M5 chart. The strategy that we use, we call it the setup one. We have a members area where our members learn to become disciplined, to become great traders. So they go to 3 stages. So if you are already a subscriber, welcome back to you. What I'm going to do now in this video is that I've just completed my chart analysis where I look at the entire Forex market and a few more markets. We look at what our strategy is telling us, and we also look at what the price is doing using our indicators, which we call the AIMS box, the eWave, and the AIMS gator indicators. So that's the setup, and we apply the core concept behind it is the 10-second to Elliott wave. So we use the AIMS wave indicator to analyze the market, which wave it is in. Based on that, we create the setup one signal, which would allow us to trade the next wave. So that's the whole concept. We also have another strategy, which is for stage 2, a little bit advanced. That strategy is called the hunt strategy, and that then allows us to trade inside impulse waves. So if you're not into waves, no worries. There's a link in the description. Download this PDF book. It's free, and it will teach you how easy it is to actually take advantage of the Elliott wave, which is a complicated but a very powerful concept. This book explains it in the simplest terms. So that's why instead of hours and hours of count, once you learn this technique as explained in the book or in my recent videos of the 10-second Elliott wave concept, you will be able to count any wave on any chart on any time frame just by looking at it. So that's the concept behind, and we have incorporated that into all of our strategies, but our main strategy is the setup one, which is everywhere on this channel. So let's go and have a look. So I have some chart analysis and some trade ideas. So when I do the analysis, that leads to those trade ideas. So let's begin. So what we see here is a 3 down and a 4 up, and a dodgy kind of a 5 down, because the 4 up is impulsive and it's not followed by a sideways wave 4. So not really a typical setup one for you, and that is why I'm not short on this. There's another reason as well. If you go to the daily chart, what we see is a strong move up, and this is some kind of a pullback, a correction, followed by what now appears as a cherry signal. So if you go to the 4-hour chart, what we see is a 3 and a 4 setting up on this. So you have a 4 down, and if this stays sideways like so, a couple of days, it will set up again for a long, whereas the daily chart has already given us a hunt signal, but not my favorite hunt signal. This was the reversal of the wave. Otherwise, if the purple wasn't mingling here, this would have been an attractive, long here or here. This is ideally like, when you have the fresh cross and then the monarch, that's where we want to be. Okay, let's lower the volume a bit. Same thing on the Australian dollar yen. So the other day we saw this market going down, and then it created this seed. The seed is indicating a hunt bull signal, but what you need to keep in mind is price actually went up, peeled away from the gator, created an angle, and then it was followed by impulsive move down. This is a bearish, against the trend, but bearish Waltz signal that was. And if you mark this and go to the hourly chart, what you had here was a beautiful setup one. Now the box was big, but you had a 3 and a 4, and now what we see is that this wave has gone bigger than the previous one, so it looks like a 3 down. That would then influence you to say, okay, if this is 3, then this should be 4, and we should go for a 5 down. But if you understood what's going on the daily chart, it's slightly complicated, but if you want to improve your odds, you know, just a little bit of extra work. But if you don't do it, that's still fine, because this, even if you took this trade, it would be a break even or a small loss. That's not a problem. What would have made this a better setup was that if this entire day it stayed within that box, then we would have seen a nice move down after that. But this impulse move up is telling me that this is a 1-2. This could be possibly a 1-2, which would lead to the resumption of trend. So if you go to the 4-hour chart, again, like the Australian dollar, it's creating a 3 up and a 4 down. Inside the 4, we can already see ABC. And what confirms wave C or gives me confidence to call this a C is that within an ABC structure, sometimes the C's will be bigger than wave A. That's how the structure is. So when you see a 3 down here, and you know that this could be, actually it looks like a 3 on the hourly chart, and it should, but that on the higher time frame it is a C, it then kind of takes the confidence out of trading for the 5 down, especially when you have an impulse wave 4 up followed by a corrective wave down. So if this is 4 and this should be 5, and if this is 5, it should be more impulsive than this, but it's not. So chances are, because of this analysis, we could see resumption of trend on the daily chart, and that would mean that this is probably a wave 1 and a 2. So we'll see how it goes around here. We'll see how the market interacts, and then we'll take it from there. Australian dollar against the New Zealand dollar. Now let's look at it from the daily chart all the way to the after that. So what we see is some kind of a 3 up, which is now going into a 4. Well, 4 is not really sideways, it's actually a reversing. So a quick look at the weekly chart shows us that this is a sideways market that actually bounced off those levels. So when you see a sideways market, I won't bet on going for wave 5s on the time frame underneath. So that's the umbrella of a 4th wave concept. Because when the market is range bound, we just call it is a wave 4 of a larger degree. Or if you don't like that term, you can say there is no wave formation. It's a sideways market. And within a sideways market, your 1 to 5 wave sequence is not going to be pretty. So let's go to the next one, euro dollar. So the euro dollar, again, going to the daily chart, we see a 1, 2 and a 3 up. So let's break it down. If you look at this, this is only 35 candles. So let's go break it to the H4 chart. Zoom out a bit. As you can see, this could be a 1, this 2, and this a 3. So let me just reduce the scope of this. I want to focus on the 3 only. So inside it, I can see a 1, 2, followed by this, confirmed by this, and then a 3 up. Probably this is the 5 of the 3. You know, inside the wave, you have 3, 4, 5 as well. And that shows that this is probably either reversing or going into wave A, and then probably B, and followed by a C. If we go to the hourly chart is under the umbrella of a 4th wave. So it's producing not really pretty, but some kind of setup. So what will happen is that if it stayed like this for the rest of the day, let's say, because it's already afternoon, then if it stays this way, then tomorrow we could get a setup short if this C was to continue down. Otherwise, what we do see, if you know about the principle C, the PC pattern, it is indicating that market should actually go back and test these levels. So we'll see how this one goes. The euro yen, same situation. We had the pullback. So within the pullback, we see the ABC. See that zigzag? Let's expand that. You can see. So it's come back to the purple and now setting up. So for the 4-hour chart, when you look at it, you're definitely looking for some kind of a setup 1 long that probably will form. And because it's this way, then on the hourly chart you don't really have great structure. Now the other day, traders were looking at this and ignoring what the structure of the 4-hour was, or saying that, okay, I understand that this is wave A and this is B up, so I want to trade C down. They did go short here. The problem only is that under the umbrella of wave 4, your waves are not going to be smooth and they're not going to be pretty. Although wave C's are really tradable C's. So if you are on the hourly chart, let's say the 4-hourly chart, and you see a 3 up followed by a 4 down, within the 4 you can actually target that 3 down by going down to the H1 or the M30 chart. On this occasion there was no need for M30 chart because the H1 produced a nice 3 and a 4. So if you went short here and your stop loss was there, then you had a pretty good trade. It hit target zone 1. Euro pound. Euro pound, I've been looking at it on the daily chart. We had a look at it when it closed up here. It was a nice kind of a setup zero, but obviously these two moves are not linked now, because this is the pandemic, this is the recovery, and now this is something new happening. So I wouldn't even consider this as a wave 5 of this, because that is some other thing. So if you go to the weekly chart, what you see again is a very large sideways market, and the monthly chart then clarifies it, because on the monthly you see a 3 and a 4. So all the way on the monthly chart we are in a let's say a 2 to 3 years of sideways market. So inside it on the weekly you will see price going up and down and up and down. So within this sideways market, when price goes down like this and then pulls back, you will have a setup on the daily going down, and then so this is the spike move up and recovery from it, and then sideways. So it's really sideways on the daily chart. Meanwhile, if you were only looking at the daily chart and when it did this, you'll have a beautiful hunt signal or setups here on the 4-hour chart. The Australian dollar and the euro dollar, we did go long here and exited here with a very tiny profit. I think I should have taken half here and then moved stop loss to break even, but we didn't do that because we were expecting it to go up and touch these levels, but it didn't. If you look at it now, hindsight is always perfect. You can clearly see this is the support, the box lows. Price went up, bounced against it and could not clear it. So that's that. We'll see if it comes back up and clears these levels, then you can probably, try those levels. So it's easier if you find a chart in this kind of situation or this situation to just go to the lower time frame and trade it, or around here or around here. Right now it's sideways. So on the daily, if you look at the candles, this was a Waltz pattern telling you showing you a trend candle followed by a pause candle or a correction. So that created this setup, but likewise maybe this is not the trend. Euro New Zealand dollar has a seed signal short, but that's a longer term view. Again, if you go to the monthly chart, what you see is a sideways market or an uptrend. On the weekly you see there was a pandemic response and then reaction after that recovery. What we see now is price is sideways and it's actually in a corrective wave. That's why the waves on the daily here are ugly. But from the daily point of view, it's moved down, pulled back up. So on the 4-hour chart you will have a setup. So what we see here on the 4-hour chart is a 3 down and a 4 up and setup 1 forming. So I would want this box to be tighter, but if you are confident, you can actually go short here with stop loss up there and target your target zone 1. Now see, the target zone 1 is just below the 3, so it would be best to actually target the lows of 3. That would be the safest bet. Euro CAD, very sideways market. I have still those lines in there. It broke, it came back. Usually when you have a market like this, just don't even look at it, because it's going to be ugly on the lower time frame. It's not going to create beautiful setups. but sometimes they do, you know, sometimes volatility changes. Depends on what is your main trading time frame. So the pounds, let's go to the daily. We can see that, you know, pandemic, reaction, recovery, sideways, tried to break down, but it wasn't really a 3-4 for this, so not very confident about this. And then it went up, but did not resume. Now, if with this kind of a trend up, you don't want to see these huge 2 candles in reaction of that. It should have been red candles but small, so that it could create a sideways market like that. So if you go to the 4-hour chart, the move down is very impulsive, but at the same time it's a 1, 2, 3, and this could be a 4. So this is the impulsive type of wave 4 happening here. So that's why the apple is a good bet. If you take the apple here, it's going to be the gamble entry, so the 0.25% entry here, stop loss here, add on above that box, and you could have one balancing entry in between, because the distance between this and this is 100, so put one, the difference is 100, so 50 pips from this entry would be your second entry and the third entry there, because that way your average position is going to come somewhere around here instead of being up there. And what you would be doing is that you will be targeting a wave 5. It probably starts from here and goes up there. So when you're loaded here, this would be the third zone, third phase of the fruit method, and then you would let it run and follow the green line. We had a trade on the pound Swizzy. It was a lovely setup, but didn't work, and I know why. You can see that the market is still sideways. It's not really a strong trend, but still it was a good trade. It didn't work, that's fine. Even if you look at it now, the analysis of a 5 down is still on the table. But how you would lose confidence is that you don't yet see a very strong trend. Like, for example, if anything like this on the hourly, if the market was here and you were on the 4-hour hourly chart, it would be very, very easy to take because it was a strong trend. The pound yen, go to the daily chart, you can see it moved up and came back. So that's a pullback, but now it is entered that range again. And as you can see, it's bounced off these levels, so we have to see which way it goes. Likewise, like the pound dollar, it has the 3 up but a very impulse 4 down, and this is where it produced some kind of a setup for you if you wanted to take it on the hourly. Why am I mentioning this? It's because, one, we took this trade, it was a beautiful trade. Second, I want to reinforce that thought. We had a discussion with Robert the other day, and while I did say that yes, it's ideally not a good thing to trade the 4th wave, but there is this caveat in it that if you're on a higher time frame, there is enough range within wave 4s. So when you see a wave A followed by a B, a C is imminent, and C's are impulsive waves, and on a lower time frame they would also have a wave 3 in it. The only difference is that when you see a ABC, you should know that you've traded a C wave down. So it wouldn't always be a great idea to follow wave 5 of a C, because C usually would just be a 3. So it's like this. So instead of looking at it at 3, 4, 5, which is still valid if you want to do that, because of the H1 chart, I can also look at it from this point of view. So usually wave A is equal to C. Sometimes C is even slightly bigger than wave A. So that's that. Let's not discuss this one. This is just sideways. What else can we do? Okay, so the Kiwi moved up strongly and then pulled back, and now we have a cherry signal. By all means, it's going to be a setup one on the 4-hour chart. Yes, it is setting up. So what we see is a 1, 2, 3, and 4. Don't know if this is a B and if C is going to come down, or are we going to see a 5 up, in which case this cherry will take you into wave 5, which would be something like so. You come here, target zone here, so that's going to be target zone, or you trade it on the 4-hour chart which would use the same mechanism. And you could take a trade up here all the way till there. What else do we have? New Zealand dollar yen, same situation like the Kiwi earlier. So you have a cherry long signal available to trade, which is going to be setup 1 on the 4-hour chart. Here we go. So plenty of signals. Let's just do dollar yen. Dollar yen is actually not in a trend on the daily chart, but it has a strong move down because of the dollar index. Actually, the whole of dollar is losing value, and it's taking a pause now. So on the 4-hour chart, you have a 3 down, possibly wait for a 4 to form here, and maybe it will continue down. So we'll see. Dollar CAD, slightly different story. Same, we have been following this chart for a while. We saw it go sideways almost 8 weeks, and then it broke here and paused, created some setups, but then it was a strong recovery up there. So it kind of screwed the pooch here. The cherry signal is preceded by a very strong bullish candle, which takes the fun out of the cherry. But if you go to the 4-hour chart, what you see is an impulse wave up, and it's not followed by a nice looking 4 down. So it is in a confusion state. If you go to the hourly chart, same thing. You see a strong 3 followed by not a very clear 4 or a 5. So we'll see what it does. The Swizzy, we had a trade on it based on this pin bar, and the idea on this type of trade is that when you see a price that's pulled out of the gator and then a very strong fruit candle, a pin bar appears, you take a long up there, or at the open of the next candle, you take a long, and you easily ask a question, where is it going, if you want to turn this into a short-term trade. And then you start looking at candle lows. So this was the next available candle low for anyone to target. So if you go to the hourly chart, that's exactly where it's these levels. That was that candle. So if you don't use candle, just use the box lows and highs, same thing. So it tried it again today and it failed, came down. We took our more than half of profits on it, just trying to let it run. What if it comes all the way up there? But it looks like a pretty good downtrend for now. So we'll see how it goes. CAD yen is doing the similar thing like all the other yen pairs. So you can just look back at what we talked about, New Zealand dollar yen and Australian dollar yen, similar kind of things. This is the Bitcoin. So yesterday we had this setup on the hourly here with impulsive 3 down, 4 up, followed by something down. Should have put target point here at target zone 1. Let me draw it. But greed took charge. But anyway, after this candle was printed, it was pretty clear that it was rejected and a reversal candle was created. I didn't want to go long, but I exited my trade, which is pretty good. Gold is going down on the hourly chart. Could create a setup 1 for tomorrow, but it's sideways on the daily, so not fun. This is oil. Daily is taking a pause. We have a cherry up. Not really something that I'm looking at the moment. And that's an overall trade chart of the dollar and the Turkish lira. I think it is setting up for another wave 5 up. If you look at the monthly chart, or actually the weekly chart, you'll see that it's during 2018 there was this strong 3 created. Dollar raised its value against the Turkish lira, and then it went sideways for 2019, but at the start of 2020 it moved up and retested those levels and pulled back. So it is quite possible from this point of view that these cherries will take us into a wave 5 up, which is setting up as a setup 1 on the daily chart. So either these levels or beyond are possible. And that is it. We can look at the indices later.
Thank you for watching. I hope you liked this video And if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.